All right, oil prices. Let's get a check on where we're going there. Not so good news this weekend when the Saudi oil minister announced a cut of 1 million barrels a day to start in July. That comes after other OPEC Plus producers agreed in a meeting in Vienna to extend earlier production cuts through next year. It's thought that the new cut will likely push up oil prices in the short term. Long term, well, it may depend on whether or not Saudi Arabia decides to extend this production cut. Jay Young has been with us before. He's an oil and gas expert, a fourth-generation oil and gas professional. He's got a leadership team with over a century of combined oil and gas exploration development experience. And they maintain an operating staff of industry specialists, including geoscientists, engineers, field operations, finance, accounting, and land professionals. And yes, Jay can pump his own gas. He's also the author of The Upside of Oil and Gas Investing. Please welcome Jay Young to the program. Mr. Young, welcome back, sir. How are you?
And I'm doing great. Great. Good to hear your voice.
Thank
Great
you.
to hear your voice.
Yes, nice to have you back, sir. So on the Saudi production cut, is that going to have an impact on prices?
Absolutely. I mean, any time that there is a disruption in supply and demand, and I think that's a lot of people think, well, it's maybe it's these guys in cowboy boots and cognacs and cigars that try to gouge you at the pumps. I mean, they say that if you go to the pumps on Friday afternoon when everybody's got their paycheck and they're rushing and there's lines, that's when gasoline prices are going to be the highest.
Mm-hmm. But
on Tuesday morning at 8 o'clock, if you go, or maybe 10 o'clock, if you go, prices will be less. That's true but that's all about the gas station is what's pumping up that price and coming down that price. What we do as oil and gas producers is we're producing oil that we've been in the midst of drilling for 6 months. I mean, it takes that long for it to go from an idea to a drilling prospect to getting a rig to putting it in the pipe, the whole 9 yards. So we're not the ones that are gouging people with oil and gas. It's all about supply and demand. What's the supply of oil in the market and what's the demand? So when you have the demand that is continuing to increase, we are seeing and I don't know why, I mean, I do know why, but Saudi Arabia says, we're going to cut 1 million barrels of oil. Okay, that means supply is going to be down by 1 million. Is the demand going to be down by 1 million with the summer coming up and with already here and people starting to drive more? No, it's not going to go. It's not going to go. It's going to go the other way, which means demand's going to go up, meaning that we're going to have less oil in the market. So and the demand's going to go up. We're going to see higher oil and gas prices. Saudi Arabia and all these other countries are just licking their chops pretty much because they have the United States over a barrel because we don't produce as much oil and gas in the United States as we need to, and they want to keep these prices higher. I mean, they don't want to go overboard because if they go to $80, $90, $100, $120 a barrel, well then, man, everybody in the world gets in the oil business because it's like there's a California gold rush or something, So they don't want to get it that high, but if they can keep it at this $70, $80 a barrel, man, they're doing good. Because we're not drilling like we would be or should be in the United States, which is a whole different segment. Call me next time; we'll go over that. But it's a whole different. But right now, I mean, your question is basically about supply and demand.
Mm-hmm.
What happens when Saudi Arabia, or what happens if a company comes in and just dumps a tremendous amount of oil in the market? Well, you'll see prices go down. But it's like when the pandemic happened and demand went to almost zero. You saw oil prices go past zero to negative for a couple of days, but it took it a while to get back. But once everything caught up with everything and that supply and demand met up, and then oil prices, because we didn't go back to drilling very fast, and we're still not. I mean, rig count's still down.
Rig count, yeah, double digits.
Pre-pandemic letters.
Yeah, rig count is down double digit. The number of total active drilling rigs in the United States fell by 15 this week, according to data from Baker Hughes. That has fallen by 52 over the past month, the largest 4-week drop-off in activity since June 2020. And then this morning, crude oil futures did open the trading week higher after Saudi Arabia said that they were cutting production on top of OPEC Plus's reductions. The Brent crude oil contracts were standing this morning at $77.84 a barrel. But our fuel prices were a little softer than I think a lot of people at the beginning of the spring anticipated. Is demand down, or how much is Russia's continuing? I mean, their economy, man, and this war effort in Ukraine, they need to pump as much as possible. And the idea that we've closed off all their market is kind of a fantasy. So they're pumping large volumes of oil into the market. Is that one of the reasons why prices were a little bit soft? Because that's why the Saudis say they're taking this action.
Well, that's true, and also demand's been down. With demand with a bunch of with the China and we just don't have the demand coming back like we have in the past, and so when you see that, you're just going to see less prices, and you're not going to see what we normally see when we're going. And it hasn't caught up. I say it hasn't caught up because it takes a while for all your demand activities and your supplies, and like a lot of people right now they're not drilling for all the United States, and you're seeing demand come back from a lot of different, and you see inflation and you see all these different activities. But when everything comes back, I mean, it could go the other way. But yeah. I just think there's a larger, 70-80% chance says that, you know what, we are going to see higher oil prices by the end of the summer. And the numbers that I'm looking at is because you never can 100% predict anything.
Right.
But when you do see things like, well, we're drilling less for oil and gas in the United States, normally when profits like this are so high, when prices are like so high and companies are making billions and billions of dollars like Chevron or Exxon, ConocoPhillips, when those guys are making billions and billions of dollars, normally what happens is you see these companies go back and start drilling again, but they're not doing it this time. They're not going back in the marketplace. That's a problem. And so that's where I see it in the next, 3 months, 6 months. I think we're 2 to 3 years on the investment cycle. I see we'll do very well there. So it's going to take some time yet for us to get out of this hole and for us to not rely as much on oil and gas.
Why aren't they drilling, Jay? And then have you noticed in the last 2 or 3 years that we are now in the United States more dependent? Other countries are dictating the price of oil more than we are. Have you noticed a change there in the last 2 or 3 years? And then why aren't oil and gas companies drilling? Has it been difficulty getting the permits, or they just feel like there's enough of a movement within this country to put them out of business, basically, that they're not going to make those investments?
Yeah, you're seeing a lot of companies that like Exxon has 2 or 3 people on their board, and those people are saying, let's don't go back to oil and gas. We don't want to go back to drilling for oil and gas in the United States. And so, unfortunately, that there is a lot of people that aren't doing that. Or Exxon isn't going back and increasing their rig count like they normally would. Or like banks, financial institutions.
Mm-hmm.
They either got stung back in the 2015, 14, 15, 16, where they invested literally hundreds of billions of dollars, and they probably didn't get all that money back. So they're like, all right, we're good. We don't want to go back in this old business because you put a lot of money out there, and if you don't sell it or have, get a good return, well, then there's a lot of other alternatives that you could be doing, which is, like institutions. It's like there's companies, oil and gas companies here, that have private equity companies that have platform companies. That market's pretty much shut down because the financial institutions like the retirement funds of California and people like that normally would invest in their money into programs like oil and gas in the United States, they're not doing it because they don't want to have anything at all to do with oil and gas. So it's just a myriad of different options or different, activities that people just aren't doing it. They're not coming back in the United States, and And it's normally when you see $70, $80 a barrel, I mean, our clients are very happy. They're coming back, and we're investing a lot. We're a private company. We're different. You can go look at kingoperating.com, but for an alternative. But ours is different. But public companies just aren't coming back. I mean, there's a lot of public companies that literally, I mean, you can buy for, like one company, Ring Energy. I own shares in Ring Energy. I'm not on the board. I'm not telling you to buy it. I'm just saying that there's a company like Ring Energy that it makes $300 million a year. You could buy the company for almost $300 million a year. It's crazy, the numbers that are so lopsided on Wall Street right now, because people just don't have that. They're not going back to drilling like they normally would in the United States, and the numbers just get all whacked out. And I mean, if you bought a company, if you paid $300 million for a company and you get that back in 1 year, I mean, that's the greatest deal ever.
That's
you would think,
fantastic.
Right?
Yeah.
I mean, EBITDA is 1x or something. It's crazy, but everything's just kind of, Wall Street's just trying to figure out what's going on, where are we going, what's going to happen, where should we drill for oil and gas or should we not? What's demand? I mean, demand is going to stay strong. We feel like, because you not only use oil for gasoline and jets and planes and automobiles and trains. I mean, you
use it for a lot of things.
Use oil for many plastics and
crazy.
And I mean, just look around your office. I mean, there's just
the roads,
things.
The roads we drive on.
Yeah, exactly. Asphalt for roads.
Yeah,
it's in tires for Teslas.
Yeah, right.
It's all these different items. So it is, and it's going to be around for a long time. So we're very optimistic about where we are as a company, and we're very optimistic about what we're doing and how we do it. And we're just excited about the opportunity. We don't think that it's going to go too crazy, and oil prices will get too out of whack, because if oil price went to $100 a barrel or more, you would have all these different companies go back in and start drilling again. Even at $100 a barrel, when it went up there briefly a year ago, we were seeing companies and we were seeing private equity companies that were kind of going, well, okay, maybe we should do this again.
Right. They got drawn back.
They didn't want to, but they did it. Exactly.
Let me ask you,
like the guy on The Sopranos.
Let me ask you one last thing here, Jay, and I'm out of time here, but I just wanted to know, from your perspective, are we refilling the Strategic Petroleum Reserve?
No, we're not refilling it. We're still taking oil out of it, and that's kind of what's kept prices higher. I mean, if we didn't have that right now, we would be at $80, $90 a barrel, if not more than that.
Wow. Well,
that's just a false sense of what the market thinks. The market thinks that we have all this oil. We really don't. So we're having to suck it out of the strategic reserves, and Biden's going to have to buy that back. I don't know if he really wants to or not. He doesn't want to pay $80 a barrel, so I don't know if he's going to buy it back or not. But
well, he may have to if he wants to refill it.
We wouldn't need it.
Yeah, hopefully we don't.
Yeah.
I mean, the hurricane season could bring some instability to the energy markets too later in the year if we get hurricanes hitting in the wrong spots. That's a discussion, I guess, for another time. Jay Young, oil and gas expert, kingoperating.com. You want to check him out. Jay, thanks very much for your time today.
Absolutely.
Appreciate it.
Touch base again soon. Thank you.
Yes, sir. There's Jay Young, and at least in the short term, looks like the gas prices, in his opinion and in the opinion of others, will be going up.